What's up, everybody? Michael Silva here. Survive the squeeze. That's what we're talking about on today's Stock Market Brief show. We're going to be getting right into it. Stocks fall for the second day on the U.S.-China tensions, and on top of that, we had some hawkish comments coming from multiple Fed members. We had the San Francisco Fed talking about the Fed is nowhere near being almost done in fighting inflation. We had Cleveland Fed come out. Inflation's not going to come down quickly. We had the Minneapolis Fed, which is Fed Kashkari, come out and say the Fed is a long way from backing off. And then we also had a Chicago Fed President Evans come out talking about that 75 basis points could be potentially okay. How did the markets respond? Well, everything is basically in the red. We saw some positive movement earlier on, and that was really because of the U.S.-China tensions and Pelosi landing in Taiwan. We'll continue to watch what develops there because it just doesn't seem all too hot right now, this particular point in time. There's a lot of unknown going on. If we take a look at how the Fed watch tool reacted to this, take a look here. It's not as decisive as it once was. It is now almost even, going from a 50 basis point hike to a potential 75 basis point hike. So we'll see here. We do have inflation data coming out on the 10th, I believe it is. And we'll see here if they get, if these change or give us a little bit better probabilities going into the next meeting. Now, and the next meeting, by the way, is September. The inflation data that comes out can really have a big effect here. Now, what's going on tomorrow? Tomorrow, we do have a lot of data coming out, specifically PMI data you can see through multiple countries over here. And then also after that, we also have some coming out for the U.S. too as well. So be on the lookout for that. Survive the short squeeze. What we got going on here? Well, first and foremost, I want to point out this indicator. It's been really helpful. If you're new here and you haven't seen this before, this helps get a good insight as to potential volatility to come. And, if you look at the red lines, those indicate the times where the rate of change between these two products reached to 1.3%. And I highlighted them down in a vertical line down in red, and it shows the VIX down here, and you can see when it crosses, bam, we see pops, in volatility. And, if you look back through history on this, it's the last 10 times have been spot on, so 10 for 10. Now, this triggered again, so the 11th time, since I've been tracking it at least, you can see we've had the pop. Now, what it doesn't tell you is how high the pop can go. So even if this starts turning back around right away and just crashes down to 15, which I highly doubt it will, it still gave us the indication that volatility was around the corner. And, that is a good insight to have. Now, also to mention, if the rate of change reaches down to minus 2%, I recently noted that, and these are the green lines going down the screen, this actually tells us that volatility may be subsiding around the corner. And you can see here on the last trigger when we talked about it, it came off pretty hard and fast there. So it's going to be interesting to see kind of what develops, but volatility in the last couple of days of trading have clearly taken a little bit of a surprise to the upside. The VIX right now currently is at 23.93, so it's still floating around in the mid 20s. However, VXN, which is Nasdaq volatility, it closed at 30. So still, people are trying to call bottoms, tag bottoms. Nasdaq volatility is still floating around the 30 range. Right now it's closed literally on 30. So be very careful here. This is where things can very well crash, especially if we start getting more up into the mid-30s or even 40s there, which is always a possibility that we need to be made aware of. And then Russell volatility too as well. People are trying to call bottoms and stuff. We are seeing these squeezes in the various stocks and so forth, as getting through this earnings season. But today we tagged a high of 30.09 and we closed in the high 20s, 29.09. Okay, so still very high volatility across the board. I'm taking a look here at the Nasdaq McClellan Oscillator, and you can see here, if we just take a look at the Nasdaq Composite, we've been seeing a big rip your face off type of rally taking place. Is this, a full breakout? This is the bottom right here. We're going to continue to move higher, or are we going to see continued chop back and forth and try to build out a stronger base? You'll hear a lot of confident people say one thing, and other confident people say another thing. Let's play it day by day here and see what new data comes out. as it stands right now, we talked about down here, right? As we had a low to a lower low, where the indicator was putting in a low to a higher low, indicating that we could very well be seeing a potential breakout or bottom in the NASDAQ composite, so growth stocks. Now what I want to call out here is we are starting to see the opposite take place. We have a rising wedge, okay? That means we had a big move to the upside. Now price is getting very tight up here, and the internals are weakening. You can see the last few trading days have been kind of, high, lower high, lower high, and then we had a high right there too. So internals are weakening as price has perpetuated to the upside. Okay, so that is something to be very cognizant of. If you take a look at the BPCOMP Q chart, which is the bullish percent index, it is still remaining in that overbought section at 75.96, so a pretty strong reading there. This is not the area where you want to just jump in blindfolded and say, let's go, right? This is about surviving a short squeeze, right? So if you shorted down here and you didn't cover, or you held the short all the way up there, then, that sucks. But if you're starting to, if you know how to tactically short, you could very well find very tactical areas to kind of get in slowly to positions. And if not, and if you're not shorting, at least you understand that in these areas, it's not the place to go long. You need to wait for price to digest, price up here is to digest, or give us some more indication that, these hot levels are going to start cooling down. And you can see here, just very well on the other side of this, when prices, when the RSI gets down to here on these BP charts, this isn't really the time to start shorting, but yet people want to do, where the price goes. Like, so if the price is heading lower and lower, people are like, okay, now it's time to short. Okay, well, no, you need to be tactical. This is a bear market, okay? It is still a bear market. The NASDAQ composite is still down greater than 20%. And you can see here, it also gives out divergences sometimes too as well. This was a divergence to the price action where you had a higher low where the price action was coming down here too. Okay, so let's continue on. I don't want to spend too much time with that. I want to get into some of the time frames. I'm going to be using, because I need to see candles a little bit more clearly here, I'm using the 65-minute time frame, 30 period moving average, which is the 5-day moving average still. And I want to call out a few things that you might not be seeing everyone talk about. Maybe you are, maybe you're not. But we're going to go over the SPY first, and then we'll go over the Qs and also the IWM. Important note, we came back up to the volume shelf profile over here where we saw this prior, all this chop back and forth, okay? And then we had this explosive move to the downside. And now you can see we're back up here, and you can see we have matching highs. Look at the RSI. The RSI is very similar to what we saw back here. So you can see the price has been trying to move up higher, and we have a negative divergence that's currently building. From a bullish perspective, we are still above an inclining 5-day moving average. So the bias here is still bullish, surprisingly. We'll get into the IWM and what to watch for momentarily, but that is something to pay attention to. So short term, short time frame, the 65-minute, even the 30-minute, 15-minute, whatever you look at, we're still above that inclining 5-day moving average. Okay, so that's important to note. Let's continue on to the Qs before we get into the IWM. Also very similar, right? Boom, negative divergence. Very similar to here where we got all that chop, negative divergence, and then we started breaking down. As far as where we are in the expected move, if you're wondering what these dashed lines are, this is what the weekly expected move is based off of implied volatility from the close of business last Friday. So it gives us an idea as to where we can potentially see risk go. 68% of the time, price closes within this risk range here, okay? However, the last 2 weeks, which is very rare occurrence, 2 weeks in a row, we actually closed outside of that one standard deviation move. It's extremely rare. You have to go back through multiple, chart or time frames to see 3 weeks in a row closing outside of that expected move. So the range of volatility here in the Qs is rather small, but what you're seeing from a day-to-day basis is large swings back and forth, okay? And this brings me to the IWM. The IWM is, we're seeing something very similar here to what took place on the recent ramp up. And what I mean by recent ramp up, okay, we see these very strong moves to the upside, and then all of a sudden price starts to get a little kind of back and forth. It seems like distribution, but it starts to coil up, right? Expansion move starts to get very contracted, and you can see these wedges form here in the IWM. Well, back here going into June, that happened on a negative divergence. It's currently happening again on a negative divergence. And what you'll notice is the 5-day moving average was inclining. Same with right here. And you can see price held multiple times. It wasn't until we got the crack of the 5-day moving average when you could turn a little bit more bearish. And even at that point, okay, you need to be aware that price actually, that the 5-day moving average, it takes some time for it to start turning back around, and never tagged it. So this was a very sharp move to the downside. So why am I showing you this? Well, we need to be just aware that price is still above a 5-day moving average. So if we do get a breakdown of this, it doesn't necessarily mean price is going to crash down like it did over here. It's a possibility, but you need to get a confirmed downtrend in the 5-day moving average to feel more confident that the bears have control, which they do not right now on the shorter time frame. We are getting extended moves, right? We have negative divergences building in the PMO, the RSI, and so forth. And we even have a bearish structure here. So it is possible for sure to crack down and start hitting these lower ranges, but we haven't done so yet. So the direction right now, currently in the short term, is bullish. But there are things on the longer time frame and the longer term and even the macro kind of outlook that is bearish. So it's a very, very difficult market at this particular point in time to navigate. So hopefully I talked you through that. I'm going to go over to a couple more things. We're going to talk about the Bitcoin to gold ratio, or the Saylor to Schiff ratio. Why do we call it this? Well, Michael Saylor is the king of Bitcoin. All he does is believe in Bitcoin, and then gold. Schiff, right? But Peter Schiff is all about gold. That's all he wants to do. And, Peter Schiff doesn't like Bitcoin, and Michael Saylor doesn't think gold's worth anything. So it's called the Saylor to Schiff indicator. Not really why I'm trying to explain here. If you want to deep dive into this indicator, I show you how to build it on one of my videos. I'll link it in the description, okay? But the red lines are sell signals, green lines are buy signals. So what do we got here? We had a sell signal and it cracked down, went significantly down, right? 40, 50% or whatever it was. And then we had a recent buy signal, price started moving up. I'm calling this out now, and I'm calling it out early. We haven't had a confirmed sell signal. We're still in a buy signal, but we're at 6.6% on the rate of change. Here's the zero line right here. If we start getting crossing through that, well, then we need to cross through, the low of the prior week whenever that loads up, and that'll be a confirmed sell signal, okay? So I'll let you know if that takes place, but I want to really call out that this has been actually a pretty good indicator for the overall market too, looking at like the NASDAQ composite. So the NASDAQ composite on the last sell signal, and even on multiple of these, it actually worked very well. So if we start seeing this cross down through zero, we got to be very, very careful and aware that, hey, the NASDAQ composite, which is heavy growth, can very well get hit. Bitcoin is just a higher beta, and so far it's been moving hand in hand. That doesn't mean it's going to stay that way, but we'll continue to track that. If you look at Bitcoin on the daily time frame, it's still in a wedging structure right here, so it's just pinging back and forth, down slightly at this particular point in time. But we are putting in the shorter term, higher lows and higher highs in the short term. But you can clearly see, even though the short term might be bullish, it is creating a bearish structure in a overall bearish trend. Okay, so short term means bullish, but the longer term, still the pressure is down. Think of yourself swimming up a river. If you go along, right here, you'd be swimming up a river. You can get lucky and you can make it all the way, all the way back to all-time highs, or make it to the, wherever the river goes, where, you can flow up the river. But just understand that there's a lot of, weight pushing this down to the downside. And we haven't really built out a significant base at this particular point in time. Another thing to note too is Michael Saylor, he stepped down as the MicroStrategy CEO. So now we're going to have a new CEO for MicroStrategy. On the last sell signal that we got, MicroStrategy, MSTR, right? MSTR, it fell 70% from the sell signal to the low. So this could be a very big one to watch. If we get a sell signal in the Bitcoin or Saylor to Schiff tool, I'd expect we might potentially get some big news events to drop. And you got to wonder, with a new CEO, are they going to allow, what's going on with the balance sheet owning that much Bitcoin, or are they going to step in and potentially sell it if the price of Bitcoin continues to get hit? I don't know, but we will continue to watch it. We'll play it day by day. Last thing I want to talk about here is the zones. Currently, I don't really post this too often. I post this really because on only my my Patreon group, but every once in a while I'll talk about it. I don't even actually list it in here because I'm still working with it. I'm still testing it out and really kind of understanding it, but it's been pretty beneficial so far. So I'm continuing to just, make notes and post that in my Discord. Before I get into just what's going on, what I notice, I will say that if you're not already part of the swing trading or the community, the Figure Out community, the Patreon group, it's $9 a month. If you don't like subscriptions, like myself, you can pay annually, and it gives you a 16% discount. It ends up being, I believe, around $90 US. And then note that when you go to my page, I don't have any posts there anymore. So you're gonna be like, oh, where is he post? On the very first post, I reconfigured it to just, welcome the guests and then show them how to get into the Discord channel. I post everything on the Discord channel. So if you don't use Discord or don't like Discord, don't even bother, okay? It's so much simpler for me to just do everything through Discord. You'll see the announcement sections, my social media watch list. That's where I post my watch list. I'll give trade ideas and charts here. I'll give weekly expected moves, and then I post my zones and thoughts over here. And this could constantly change. I can add more. I've been adding more as the price continues to just stay the same. And then we have the community lounges like a con lounge, party lounge, intraday, and so forth down the list. Book club, options, crypto. This is where the community can post their trade ideas, and we actually have quite a few members post some just killer setups. So if enough of that, I want to get into the daily zones here. What I'm calling out, what I've noticed is recently the dollar, right? The dollar was having actually significant upside versus the downside in prior days. And we were looking at the low end of the range, which is around 105. And what I noticed just recently, we called this out, and if you haven't seen it on Twitter, I posted it there. But having the dollar at a low reading like that and coming into the lower area of the zone, it signaled to me, hey, if we start bouncing here, it could put pressure on the indices. And that's what we're kind of seeing right now, as well as the various sectors. As I noted earlier, that they were all in the red. All 11 sectors were down in the red. So what am I noticing now? Well, if I go from, if I stack rank this right here, right? So SPX and VIX, those I keep at the very top. But here is what the upside is, and I have it ranked from smallest to biggest upside. Doesn't mean that it's going to be reaching these upside levels, or it's to give you an idea to manage risk. But what I'm noticing here now, since we're starting to see a little shift, is XLP, the dollar, and utilities. These are defensive sectors, and I'm noticing that the upside now is actually contracting. It's getting smaller, where the downside is growing, okay? And why is that? It's because defensive names have been performing. We're popping up a little bit higher to the upper end, upper range of the zone, which says that, hey, the downside is minimizing. Doesn't mean that it can't go higher, but it's telling us, hey, and if you look at the chart from an absolute perspective, it signals, and I did the same thing with TLT. We used the weekly expected move, and I talked about that on yesterday's video. It wasn't the best time to buy, and as it stands right now, there are probably some various good setups within the sector or within the industries of, various utilities or consumer staples. But as it stands right now, the spider is letting us know that, hey, the zone is telling us that there is some, some more downside. So is it the best time to buy right now? Looking at this from a risk to reward standpoint, no, that's what it's telling me. And if you look more down towards the end of the list, you're starting to see, ARC, semiconductors, crude oil, miners, right? The downside or the upside, you can even see here, these are the largest upsides, but even if you look to the left or right over here, the downside is still pretty good, pretty decent size. That's with XME, ARC, and semiconductors. They're almost like 1 for 1 for the most part, slightly off, right? XME is, risking 1 to get potentially 2 to the downside. And then crude oil is, you can see the upside is pretty big versus the downside, which tells us it's at the lower end of this zone. So yeah, we could very well see a potential, bounce at some point. It could continue to, fall. These are dynamic. The zones are dynamic. They're always adjusting and always changing. But what I'm seeing and what I'm kind of getting from this as I note this is I'm starting to see the upside and downside actually start to become more in the midpoint of the zone, which tells me that, hey, we got to just be patient here. If you haven't made moves, it's probably not the greatest time to start pressing it, because we can still very well be in for more upside, a higher squeeze, but also it's almost even for the most part to the downside. So it's a time to be very cautious. And as I've already previously stated, to wrap this all together, we have the sell signal on Bitcoin. It's pointing down at this particular point in time, still hasn't triggered. We have some negative divergences building, and volatility across the board is elevated. So it's an environment to be well aware of, to be careful. And that's all I got for you on today's stock market brief, everybody. See you later.